morning, everyone, and welcome to Hong Kong. I'm Gavin, CIO of SNZ Capital, moderator of the panel today. It's my honor. So we have 4 distinguished guests today. Emilio from Aave Labs, Mike from Flow Traders, Jeannie from Paxos, and Rob from ANZ. Yeah. So just quick intro about SNZ before we start the panel. So SNZ is the early investors and strategic partner for Chainlink. So helping them to do Asian expansion, community building, etc. So I'm very excited. This year, SmartCon could be hosted in Hong Kong, and we could be part of it. And so let's start the panel. I would love to have our distinguished guests to make an intro about themselves and also about the organization. And also, given the topic today is about like TradFi meets DeFi, I would love everyone to share a little bit, in terms of the spectrum, where you are and how do you see the convergence. Probably we start from Emilio. Thanks.
Yes, thank you very much for the introduction, and thanks Chainlink for having us here today. So I am Emilio. I am a VP of DeFi for Aave Labs, and I supervise the development that evolves around the Aave protocol as a service provider for the Aave DAO. So currently, we are building a variety of solutions around Aave, which involve RWAs, involve a new version of the Aave protocol, Aave v4, and other new solutions for our stablecoin Go.
Mike.
Yeah, very happy to go next. Big pleasure to be here. Thank you so much. I'm the CEO of Flow Traders. Flow Traders is a publicly listed market maker and liquidity provider founded 20 years ago. So our journey started on the TradFi side. So we became one of the leading ETP market makers and liquidity providers across many different asset classes. But we started touching crypto and digital assets 7 years ago and became one of the key pillars of our firm. So since then, we've become leading in providing liquidity for crypto ETPs. And as such, we have invested significantly over the last few years in building our infrastructure, our risk management, in a broader sense, our business to really lean in on the TradFi side next to the DeFi side. And I think one element I would like to highlight, this is not just about for us market making and providing liquidity. We have become a strategic investor. So we did introduce a venture fund 2.5, 3 years ago and put $50 million into it. Since then, we have invested significantly across the DeFi space in trying to understand what the next use case or the next use cases need to be in order to create an understanding of the benefits. And this is very much with the end investor and the end market participant in mind, but more importantly, also to build trust. So I'm also here to highlight that for us, it comes down to regulation. We are a regulated market participant, and specifically around how do we feel about emerging regulation in the digital assets and DeFi space. I feel this is a key component we need to talk about today.
Thanks so much, Mike. Jeannie?
Hi, everyone. My name is Jeannie Lim from Paxos. Thank you so much, Chainlink, for the invite, and thank you, Gavin, for being the moderator today. I'm very excited to introduce who Paxos is. We are not a startup. We're pretty, in what we call it, we've been 10 years in the business, and we are the issuer of USD back to stablecoins, such as USDP in the US. So you might hear Pax Dollar. And then we also issue digital gold, such as PaxG, that is mainly also regulated in the US. And we also have USDL, basically launched this year, what we call the live dollar, and primarily in emerging markets. And also recently, if you heard news, PYUSD is also our asset. So we white label together, working together with PayPal, we white label their stablecoin first ever, PYUSD, and we just recently hit $1 billion market cap. Thank you.
Thanks, Jeannie. Rob, your turn.
Thank you, Gavin, and thank you to everyone on the panel. So good morning, everybody. My name is Robert Porter. I'm a director in the Digital Asset Services team at Australia and New Zealand Banking Group, commonly known as ANZ or ANZ, depending where you come from. So for those that don't know ANZ, we're the leading institutional bank in Australia, We have 8.5 billion customers across retail, commercial, institutional segments, and we operate in 29 different markets. And I was thinking about Gavin's question about where we sit on that spectrum. Now, we recently celebrated our 180th anniversary, and for 177 years of that, we're in TradFi. So I guess we're TradFi maxis for the most part. But 3 years ago, we did establish a small team to look at how digital assets and currencies would impact the bank moving forward. So we started our journey by looking at stablecoin as a medium of exchange. As far as we know, we're the first regulated institution bank that is to issue on a public permissionless network. We've since built a capability with respect to asset tokenization for financial products, and increasingly now looking at key themes around interoperability and working with Chainlink on CCIP.
Thanks so much, Rob. Yeah, so as everyone can see, we have a very diverse kind of composition of the panelists today. Thanks a lot. The first one is like well, last week we see some news and market stats saying trading volume of DAX is nowadays like 15% or 20% of the that of trading of SAX, right? Given Flow Traders is a major market participants, Mike, what do you thought? Like, can you share a little bit more about, like, from statistics perspective, what did you see, like DeFi picking up, like CeFi, what's the trend?
Yeah, I would like to start with a qualitative comment. So when we started investing in DeFi, I felt there was still a big question mark on how to tease the future and how to think about use cases. And I'm a big fan of partnerships. And what happened over the last few years, and I would say has significantly picked up over the last year, is an alignment across many different, if you will, parties from the banking side, yeah, from the, let's say, startup side. The regulators started chipping in, trying to frame a better picture of the future. And if I just think about DeFi, I very much, given our background, think about how to provide liquidity. And what has happened over the last 2 years predominantly is that there is a high degree of understanding that we need to move liquidity from the TradFi side into the DeFi side, making sure that we are creating interoperability between different protocols to make sure that from an investor perspective, if you move liquidity from one asset into another, from TradFi into DeFi back and forth, that you need to have a high degree of, I mentioned trust, but also operational efficiency. Yeah. So that's where we come in. We really want to make sure that we create a trading experience guaranteeing high efficiency, best price discovery, and price transparency, and yeah, also tight spreads to make sure that the investor experience is as optimal as possible. So how do we get there is then the question. And what has happened for us specifically is that being a market maker and being an investor, we are extremely focused on building close ties across the broader ecosystem to understand who needs to deliver what. You know, one very prominent example is the All Unity project we engaged upon. So it might be the first regulated Euro-pegged stablecoin across the EMEA landscape. And we teamed up with DWS, the German asset manager, and with Galaxy Digital to really make sure that we have different components of expertise coming together. So if I translate that into trading experience or trading patterns, I can claim and highlight that the amount of institutional appetite we see has significantly spiked. Yeah. I can also share that the, I would say, topics being discussed with regulators, and specifically in Europe, the discussions we have, for instance, with the European Commission, really frames a picture of the future where we see coexistence between TradFi and DeFi. Yeah. And I think this is a key element we need to further embrace as a community, because when I started looking into it a few years ago, I felt we are all in DeFi taking over, right? But the reality is, I think at least for the foreseeable future, that might not be the smartest choice. And one element I feel the TradFi side helps a lot is the, let's say, adoption of best practices. And let's be very specific, KYC, AML, putting these learnings and practices into the DeFi side. Yeah. So for instance, we have completely rebuilt our risk management as a trading firm, but we benefit significantly from all the ingredients we learned from the TradFi side. Yeah.
Thanks so much, Mike. Mike emphasized on the liquidity, on the interoperability. That's exactly why Chainlink is so very important, right? CCIP, POR, Oracle services. So Emilio, what's your observation in the lending market?
I'm actually very happy to hear that there are these kind of initiatives in progress, because this is a question that I get asked very frequently when I talk to people that observe the dynamics between TradFi and DeFi. Because like very often it happens, for example, yields in DeFi are like 9 to 10%, and in TradFi are like 3%, and people are like, why there isn't more capital flowing into Aave, into DeFi, if the yields are so high? I could just, like, I don't know, borrow from a traditional finance institution and convert to stable coins and then go to Aave and try to earn yield. But when you actually try to do it, you realize that there are so many inefficiencies and complexities in doing that, that is the reason why there is this kind of delay in arbitraging these kind of opportunities, right? Which is exactly what he was mentioning before. So I think if we want to make the experience going from the traditional world to crypto back and forth more seamless, these kind of initiatives are absolutely needed to make sure that there is a bigger window of opportunity for people to catch actually this and to intervene in these particular situations. So there is more capability for people to seamlessly enter and leave the market whenever they need to. This would make the experience much better for everyone, I think.
Yeah, thanks so much, Emilio. So in addition to trading and lending, right, Jeannie, so in your mind, right, so what the other like exciting and promising topics like stablecoin, tokenized assets? Please share.
So I've been in this week since Monday, and everyone is asking me, what do you think about RWA? Is it going to take off? What are the challenges and the challenges to adoption? And how do we get there? And I see stablecoins in general being in like the convergence from TradFi to DeFi. Because we work with both parties. We work with banks, and most importantly, we are regulated. We work together very closely with MAS, which is the regulator in Singapore, Abu Dhabi, which is where our USDL dollar is being regulated. We're also regulated in the US, New York DFS. So I think with that convergence and regulatory environment where we are basically the government's like intel and consultants to help them frame or reframe the way they look at anti-money laundering services and frameworks, and also KYC as well. And I think with that, when we work with players such as PayPal or even Stripe, as you have seen in the news, where institutions or payments players like PayPal and Stripe are starting to think, wow, we can really reduce the cost of acceptance. In the future, maybe no one's going to be talking about T+2 or T+3, and in some countries, T+21. With stablecoins acceptance, we managed to lower the overall cost of acceptance from not only merchants, but payment processors. But the ultimate SMBs are using payment services, their service, to ultimately get their funding in almost real time. So I see that as a major use case from the institution's perspective. And then with PYUSD, a real use case in this world that we're partnering with them on is cross-border money remittance. If you think about the biggest sending market, which is the US, and the biggest receiver market, countries such as the Philippines, the options for remittance today are a few, and usually are in the TradFi system. By working together with PayPal and also the off-ramp fiat withdrawal partnerships that we have in the Philippines, I think it beautifully sets a problem for us to solve is to reduce cross-border remittance costs overall from the sender and all the way to the receiver, so that if you send $100 PYUSD, we want to make sure the ultimate consumer in the Philippines receives as close to that amount. So that is, in my opinion, a real-world challenge that we can help solve.
Yeah, thanks much, Jeannie. You mentioned like U.S., like practicing Philippines as well. Mike also mentioned Europe. Like as Joseph mentioned, like Hong Kong is very open. So highly encourage you guys to talk to Joseph, talk to HKMA to see more opportunities.
That's why I'm here.
Thanks so much. Rob, could you share a little bit more works at ANZ? And also we understand ANZ have a very good collaboration with Chainlink, CCIP, etc. Would you mind share some with the audience?
Yeah, absolutely. Very happy to. Look, I think kind of building on what's already been said is there are some primitives and aspects of DeFi that are already kind of breaking out. I think stablecoin is a medium of exchange. I kind of call it the alpha, not the omega. It's a form of tokenized money, but there will be more to come. And so we're quite interested in what those various forms look like. That's part of the reason we're very happy to join the HKMA's Hong Kong dollar plus pilot. So looking at general purpose CBDC, but also tokenized deposit construct. So how will those things work in practice? We're working with Visa as our partner and some of our asset management clients here in Hong Kong, Fidelity International and China Asset Management Company, specifically back on the theme of RWA, tokenizing investment funds. I think if you would have asked me a year ago, would we see tokenized funds on-chain from BlackRock, I wouldn't have said necessarily yes, but I think we've seen a significant shift and we're moving forward. So that's kind of a big area for us. It's really around tokenized RWA. And a lot of it is driven by where there is increased regulatory clarity and where the institution is able to build and improve its risk management framework. So I think one of the things on the TradFi side is actually building the deeper understanding. And one of the great things about being on a 9-hour flight from Australia is you get to read some papers. And I read a great paper yesterday from someone called Daniel Liebau at the Singapore Management University. And he talks about this concept of DeFi literacy. And I thought it was a really interesting kind of mental model where TradFi institutions have to start better understanding some of the inherent risks that we see, smart contract risk and the like, to start to build the frameworks. Because once we understand the risks, we can align to the regulatory frameworks as they develop across in progressive jurisdictions. That's when I think we start to see the greater adoption.
Got you. Thanks so much, Rob. You talk about you touch upon risk management, etc. And Mike and Jeannie talk about regulation, etc. So we see when DeFi picks up. Sometimes there might be some conflicts between innovation, a spirit of flexibility, freedom, against investor protection, risk management. We see some hurdles and challenges there. So from your perspective, what do you think we are either a DeFi world or a TradFi world can do better to improve and to bridge the gap between? Probably we start by Mike.
Yeah, very happy to take that question. I think our personal experience is that one key success factor is a continued engagement with the regulators. So we have increased time invest significantly to explain how we feel about risk management, how we have improved, and more importantly, also leaning into the trust point. And let me tell you what I mean by that. If you just see the logic of blockchain, right, and the transparency blockchain delivers, there shouldn't be a discussion about trust because trust is inherently embedded in the blockchain concept. Still, the application and adoption of blockchain and also being mindful across many different things happening at the same time, we are not there yet. And I feel it's important to be vocal about the effectiveness of the risk management we deploy and constantly improve, but at the same time lean back to, and I really liked what you said on the use cases and the benefits. And I think what has started happening is that we became much more vocal on our vision, and it's a shared vision by now, on how this could work out over the next, let's say, few years, the next decade. And I feel the cross-country payment theme as a use case is highly relevant, but I would like to even dream a bit bigger and talk about asset allocation. So just imagine the opportunity that at one point in time you can move liquidity in assets back and forth from TradFi to DeFi, and you can change your asset mix and your risk profile within split seconds at lowest transaction costs with the highest speed possible. I mean, this is a massive transformation of financial markets. And I do believe that this also has a societal impact. So the latest figures we got is from the World Bank that 1.7 billion adults are unbanked. I mean, just imagine the social cost related to that. So I'm not saying that blockchain in itself can solve that problem, but it could be part of the problem solving. And bringing that back to discussions with regulators and other public stakeholders sets the stage for a whole different perspective on how important innovation is for us.
Gotcha. Thanks so much, Mike. So Emilio, so as a crypto native, right, what's your thought, how we can do more to improve and to get a massive adoption, mainstream adoption?
We were kind of chatting about this shortly, briefly, in the backstage, right? So it's a bit I see it as there are different aspects to evaluate here. One aspect, if we want to improve and to bring more people into crypto and to let people use crypto more freely, that's one aspect. And in there, I would say that we are still facing the usual problems that we are challenging since a few years now, which is lower transaction costs, better UX for on-ramp and off-ramp to crypto, better UX in this multi-chain world that is emerging now, where we have a variety of different networks, different layer 2s, layer 3s. We are improving. A lot has been changing in the last couple of years, and the speed of change is increasing, so we are getting more momentum on that aspect, but there is still a lot of work to be done there. Another aspect is like how and if we actually want to TradFi to adopt more of crypto and more of DeFi, or to start working in parallel with TradFi, or even, which is the scenario that I hope we will see the most, having DeFi become kind of the railway for TradFi, so that it becomes kind of hidden. You don't even know that TradFi institutions are using crypto and DeFi, but they are doing it under the hood, which would be probably the best outcome for everyone. Mm-hmm. Then that's a completely different ballgame. So we are talking like complexities with regulation that were mentioned before, complexities with a variety of different aspects related to permissioned versus permissionless usage of the technology. I do think that RWAs are one important first step. I mean, I have been working on Aave and all this kind of stuff for 6 years now, so since 2017. And we have tried many times in the past to bootstrap this kind of discussions. And until 2 years ago, if you would go to a traditional finance institution and try to pitch something with crypto, they would look at you like an alien, come to Earth to try and, I don't know, change the way the world works. This kind of vision in the last year and a half has changed a lot. So we are actually surprised now how many traditional finance institutions.
Okay, let me pitch for you, right? So, Rob, if let's say in the next few years, ANZ is going to lend out money on their platform, or you guys are distributing their kind of asset management products to your clients. What do you see the kind of gaps between hurdles between?
Yeah, there's a few things, I guess, right? So when we think about risk, we kind of think about financial risk and non-financial risk. And I think it's actually the non-financial risk that has to be properly unpacked. And we were talking yesterday evening about definitions in this space. And so when you say DeFi, what do you mean exactly? And there'll be a range of different definitions, but the one that will matter most for us is what does the prudential regulator think DeFi is? And they will take their cues from the likes of the BIS and FSB and others. So when we start to look at how the BIS thinks about this, they think about using the technology and providing the services without a centralized intermediary. That's a fundamental proposition of what traditional finance is today. So we have to think about how do you change that business model. So those are some of the things that we think about in the first instance. And then we start to drill down to the operating risk. So what is the underlying network? What are the smart contracts? Have they been audited? Those are the type of considerations, I think, in the first instance that we can work on in a fairly, really small scale, safe environment. And I think that's what will help to drive the convergence over time.
Thanks so much, Rob. Jeannie, apologies to skip you, but given the time limits.
That's okay.
So last one, I would say, so every panelist, can you share your vision and outlook of what will happen probably next few years, or share some best wishes for the convergence trend? Jeannie, you might go first.
Sure. I feel like I'm being put in this seat on purpose because I feel like I'm bridging the TradFi with the DeFi.
Because you are the flower, we are all the leaves.
There you go. So I strongly believe that stablecoins and Paxos in particular is going to be the solution and in the convergence between TradFi and DeFi, because we play with a lot of players in the DeFi protocol space. Mm-hmm. We also work with market makers and different people in the ecosystem. But most importantly, to your point, right? Fundamentally, the regulations and the banks, they want to know how are we doing KYC? What does new KYC look like, right? How do we protect consumers to know that the money in the account, whether it's a custodian wallet or it's a bank account, that is safe? So it's the same principles, and I feel like the more we converge together in terms of education, both parties, we do not use jargons. I think that is one observation I've had is the use of jargons actually doesn't help TradFi conversions with DeFi because people on both sides may not understand each other. So usually I'm the translator between the client, between two partners. So I find that over the next few years, that is my mission and Paxos' mission to basically educate the regulator together with the partners in the TradFi and the DeFi space to bring folks together and using US dollar stablecoins as a medium of exchange for multiple use cases, whether it's DeFi protocols or RWA use cases or remittance or payments. I think there's so much to do, and I'm very excited to work with everyone in this space.
Thank you, Jeannie. Mike?
Yeah, I can repeat a lot and relate a lot to what you said. What I feel is most important is that we kill a bit complexity and align on the most relevant use cases and lean into that, because it's also about standardization, harmonization, and like your point on jargon, making sure that we all understand what we talk about. The second point is, and I want to come back to our main focus, there will be a significant increase in on-chain and cross-asset liquidity. And we will most likely significantly increase our appetite for collaboration and partnering across the ecosystem to really make sure that from a technological angle, it's doable. Because that's another proof point that trust is being built by seamless trading, seamless moving liquidity left, right, and center. The last point I would like to add is making sure that the logic around DeFi and TradFi and convergence, killing a bit this idea of it will take over. What I really like is that there are significant benefits still in the TradFi side, and this really relates to all the infrastructure that has been built for decades. But DeFi, and that relates to your point, is an enhancement opportunity. And if we start embracing that and address the, let's say, biggest elephants in the room, and one being, the point on KYC and AML, so that there is an understanding of our market participants on how to think about your own risk and how the infrastructure then has been enhanced and built in order to address it. I think that's a game changer moment for the industry. And I feel this is not a point happening in 5+ years. It will happen faster.
Thanks, Mike. Emilio?
I'll be very quick because I know that we are out of time, but like I kind of mentioned before, so the way I envision it is that at some point the term DeFi will disappear and TradFi will disappear, and we will just have Fi, in the sense that like it's going to be seamless and like transparent for everyone. That would probably bring the best outcome. This will also probably mean that on both sides there will need to be some sacrifice, some compromise to be made. From the crypto side of things, probably related to some of the principles, hard principles that some purists of blockchain will probably kind of, not take this the right way. But I think that like blockchain has many benefits. Decentralization is one of them. Decentralization is also a spectrum that will probably need to adjust if we want to work with TradFi. And on the TradFi, on the regulatory side of things, like some improvements will need to be made if we want this marriage to actually happen. Like in every good love story, is like between two parties, right? Okay.
Yeah, thanks, Emilio. Rob?
I'll be really quick, 3 things. I think the good point for TradFi is we've now stopped asking the question, is blockchain a solution looking for a problem? I think we're well past that way, that's good. Second point, I think we also know that DeFi works, right? The protocols are battle tested. Granted, it works in a slightly different parallel ecosystem, but I think there are learnings we can gather. And maybe the third and final point I would make is this notion of there's no compression algorithm for experience, you have to go and do the work. So I think collaboration through the likes of regulatory sandboxes and things of that nature will allow us to be able to test things safely, and that's how I think we'll see the convergence.
Yeah. Thanks so much, Rob. I personally really enjoyed the chat today. I think it's really insightful. Hope you guys enjoy. Given time limits, I should call it today. Thank you, everyone. Thank you, all the panelists.
Thank you.
Thank you.
Thank you.